Set of earnings. V.S. Parthasarathy, the Group CFO at M&M, joins us on the show right now. Mr. Parthasarathy, morning. Just analysing your Q3 performance, and margins were a bit of a miss for your auto as well as the farm segment. By when do you see the launch expenses and commodity costs toned down? And did you guide for a flat Q4 on the back of these two factors? Would you say that?
Okay. So you asked two questions. I'll come to that. Just wanted to take you up on that this quarter there were some very good ups that if you wanted to see. One was that it was a double-digit revenue growth, and I think one of the big things to have is the revenue growth. And I always say if revenue growth is there, then both the efficiencies and effectiveness is very high, and that will follow in spite of having some commodity pressures. Second is EBITDA grew and PAT grew at 60%. So it was a great quarter for us. The margins were subdued, but that is due to the two factors that you said. Now, let me come to the two factors that you said, commodity prices and new product launches. Yes, because commodity prices were very high in terms of the increase in the commodity prices. So we've been able to pass on some, we did not pass on the balance, but now the commodity prices are ebbing, so therefore over a period we should be able to pass this on, and hopefully we will have some margin accretion because we are able to pass the cost increases on. The second part is new product launches. New product launches at the launch time, you always recognize that the margin is slightly lower because of two factors. Neither the price and the market nor the cost is mature. So over a period of time, as the volume goes, the price and the cost matures, and the product efficiency, the operational efficiency comes into play. So over the next few quarters, that also will pay out. And the revenue growth is 7 quarters in a row we have shown revenue growth, and 5 out of 7 quarters have been 10% plus, and the balance have been 5% plus. So it's been a great set of 5-7 quarter for us, and I think margin will follow if revenue happens.
All right, that's fairly interesting. You've clearly outlined the kind of trajectory that we've seen for M&M in the past. We are now, when it comes to the overall new launches, do you believe that that is going to drive your further growth going forward? Can you just highlight a little bit more about that? And also tell us a little bit about what was the discounting in Q3 and the inventory level?
Okay. So first and foremost is about the new product and what does it entail. If you looked at our last quarter, I call it the cluster of half 1, 2, 3. Yeah? 0.5% improvement in UV market share, 1% market share improvement in the overall auto space, 2% increase in market share in CV, and 3% improvement in three-wheeler market share. So I think we did a great amount of improvement in all this, and this is on the back of product launches which we had so far, both on the UV, CV and the three-wheeler side. Now as we go forward, you will have the new product launch, which is the XUV 300 come in, and that along with the other product launches will gives increase in volume growth. And when you have the volume growth happening, then the market share and the revenue growth kind of follow. So that's what we are expecting to happen. You had another question. I'm sorry, I was talking about, recall it.
Right, no worries. I asked you quite a few at a time. I was just talking about your overall discounting in Q3. What was that like? And if you can update us on the inventory level.
And inventory. Okay, easier one to do is inventory, so let me do. In inventory, if you look at Q3, we focused on making sure that our retails were higher than our billing, so that our inventory level are to a level that we are comfortable. At this point of time, both in tractor and auto, our inventory level are where we want it to be, and it's a comfortable inventory level. We do not have high inventories up in the field. Second, coming to the discount, The discount levels are a little elevated during this period as more product launches and more kind of activity frenzy happens. But I think it is a trade-off. When you have high material cost, high price increase because of material cost, there is certain amount of adjustment time, and therefore the discount happens in that way. Except for some HCV where the very high discounting levels are there. Rest I would say will be moderating more, though still not as low as it used to be, say, a year back.
Okay. Just wanted to get back, Mr. Parthasarathy, to the point about raw material. Just in case raw material costs don't move as predicted, could we see further rate hikes? How's the pricing strategy likely to shape up at M&M?
Okay. So first is, at this point of time, what we are seeing, at this point of time we are very clearly seeing commodity prices easing quite a bit, and that's on the back of already crude prices which has come down, global commodity prices which have come down, and there is a softness felt there. The impact of that is still not come fully to the Indian market, so we expect that to be the case. Okay. And therefore what happens is that there is a little bit of price increase which is in a sense carried forward from the past. The material cost has grown, not so much as much the price in the market. So at the appropriate time, I'm sure the industry will take a price increase which will be in the short term. Now coming to your question about theoretically what happens if commodity prices increase further. I think pricing is not a science per se, it's an art and a science. So we will have to gauge in terms of what makes the market still want the product and not push the demand downwards. So each of the industry players will try to gauge what is that they can pass on, and that's why you saw in the last few days that we have not been able to pass on the full cost increase. I think that going forward, if there is a theoretical case, that's what will happen. Happily, we are not in that situation. We are in a situation where costs are moderating and going down, and therefore we will have a much more easier takeoff path in the future.
Sounds fairly confident. Now, you have also had a relatively better quarter compared to some of the other OEMs, but that doesn't seem to be the end of the tunnel yet, because there is a worry about a lot of headwinds for the sector as a whole as well, the BS6, the tractor cycle. Do you think that these concerns are justified? And in that light, we can assume that FY20 could also be a little bit tempered?
First and foremost, as you rightly said, we seem to have done well in the previous quarters. Now going forward, I think one of the things about auto is I always divide auto into two groups, and I think that's the best way to look at it. One is the CV and one is the UE. A personal transportation in terms of UE, commercial transportation in terms of CV. CVs are growing quite fast, and I don't mean MHCV here. I see commercial vehicles in the auto segment. I think they are growing very well, and they're, even in Q3 you saw that they were ours was anywhere between 10% to 30% in terms of growth of those segments. So clearly there is a very good growth which is possible, and this growth should continue because infrastructure need and transportation needs intra-city and intercity are continuing. If you come to UV, I think there is a lot of product launch we are doing, which is the XUV 300, that along with Marazzo and Alturas should give us a good amount of buoyancy in terms of volumes, and therefore growth in volumes and market share. So clearly from my Mahindra point of view, in both CV and UE, we are very well placed to do. Take the three-wheelers as well. With the launch of our lead-acid three-wheeler, now with the launch of e-auto and e-rickshaw in the lithium-ion space, we are very well poised to see growth there also. So I see everywhere possible growth and going forward, and also a very positive sentiment coming on the back of budget and RBI rate cut.
All right. We appreciate you taking the time out and giving us detailed analysis, Mr. Parthasarathy, of how things have shaped up, some of the challenges going forward, your overall growth projections as well. That's the